Good morning everybody and welcome to my monthly Vietnam update. Renewed fears of more aggressive US interest rate hikes and some financial difficulties at Vietnam's fourth largest real estate developer Novaland sent the VN index sharply lower, minus 9.2% in US dollar terms in February. Also, the AFC Vietnam Fund closed the month lower, minus 6% according to internal estimates. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel and switch on the bell so you don't miss any uploads. February's market correction was mainly caused by concerns about US inflation and higher than expected US interest rates. But also news about the financial difficulties of Novaland worried Vietnamese investors. Novaland, or NVL in short, failed to pay back bondholders 1 trillion Vietnamese dong, which is around $42 million on the 12th of February 2023. And it's now trying to negotiate the restructuring of its bond to extend its maturity by another 2 months. Even though there were already some rumors in the market that NVL had liquidity issues and might fail to repay its bondholders, once this became fact, investor sentiment took a hit and triggered some panic selling in the market. Our view, however, has not changed, and we believe that the Vietnamese market is trading at very attractive valuations with a PE ratio of around 10 times, and hence offers for long-term investors a great buying opportunity. When we look at earnings growth in the fourth quarter of 2022 slowed down considerably, mainly due to the impact of increasing interest rates and lower export numbers. According to the Ho Chi Minh Stock Exchange, the total net profit of listed companies was 66.5 trillion Vietnamese dong, down around 28.8% compared to the fourth quarter in 2021. This brings down the 2022 earnings growth for the Vietnamese index to 10%, and the expected earnings growth for 2023 to 7%. Whereas the 2023 earnings growth for our portfolio is still expected to reach around 12%. Another important topic is China's reopening. We are invested in 2 agriculture companies, LTG, Vietnam's largest rice exporter, and MPC, which is Vietnam's largest shrimp exporter. Since China's reopening its borders, prices for agricultural good products in Vietnam skyrocketed due to the sudden massive demand from China. The price of tropical fruit durian, for example, jumped last month to a record high of $8 per kilo, while the price of other fruits such as dragon fruit, custard apples and jackfruit tripled year on year since China's reopening on the 8th of January 2023 after 3 years of COVID-19 isolation. But also other agriculture products such as vegetables and seafood saw strong price increases lately, and especially lobsters and shrimp prices, which are expected to further increase this summer with the arrival of Chinese tourists. Mr. Dang Phuc Nguyen, General Secretary of the Vietnam Fruit Association, said that 19.2% of Vietnam's agricultural, forestry and fishery products are exported to China. He believes that Chinese market offers the most potential as an export market for Vietnam this year after its northern neighbor abandoned its zero COVID-19 policy. According to the Lang Son province Customs Department, exports to China through the border crossing in the northern province are processing smoothly again, with over 700 trucks carrying Vietnamese products clearing customs each day. According to a report by the Ministry of Agriculture and Rural Development, China imports nearly 10 billion worth of agricultural products from Vietnam each year. Exports to China account for more than half of Vietnam's total fruit and vegetable exports. Obviously, China is the largest and most important trading partner of Vietnam, with total trade value of $177.7 billion in 2022, an equivalent to 24.2% of total national trade value. It is expected that with the reopening of China's borders, trade volumes between Vietnam and China will increase even more in 2023, a factor which is not yet fully priced into Vietnam's GDP growth forecast this year and next year. In 2022, mobile phones, computers and cameras were the key export products to China, with revenues of around $17 billion, $11.5 billion and $3.9 billion respectively. Besides industrial products, Vietnam also sold a lot of agriculture products to China, such as rubber, seafood, tapioca, fruits and vegetables, with a total value of around $6.8 billion. Our portfolio also benefits from an ever-increasing important agricultural sector with China's reopening. Minh Phu Company, MPC, one of our top 5 positions, is the largest shrimp exporter in Vietnam with an annual revenue of around $700 million. In 2022, the company decided to switch its main export market from the US to China due to high shipping costs to the US. The strategy worked well, with in 2022 net profits of the group reaching its highest level in history at 829 billion Vietnamese dong, which is around $35.3 million, a plus 28.9% increase year on year. We expect that net profit of MPC will continue to grow around 20% this year, reaching around 1,000 billion Vietnamese dong. In an environment of rising interest rates and inflation, the Vietnamese government decided to deploy an important public investment package to boost economic growth in 2023. The government expects that lower consumptions in the US and Europe will create some challenges for its export-oriented economy, with the Fed continuing to increase interest rates in order to control inflation. The National Assembly therefore approved the total economic stimulus package in 2023 of 711 trillion Vietnamese dong, which is around $30.2 billion, an increase of 25% over the budget of 2022. There are many public investment projects in the pipeline for this year, such as, for example, the North-South Highway project, Long Tan International Airport in Ho Chi Minh, the Ring Road No. 3 project in Ho Chi Minh, and so on. The Vietnamese government estimates that the successful deployment of this package would contribute around 1 to 2% GDP growth in 2023, which would help to offset the negative impact of higher interest rates. The new Long Tan International Airport is currently under construction, about 40 kilometers east of Ho Chi Minh City. The Vietnamese government approved its construction on the 4th of January 2021, and its first phase is scheduled to complete by 2025. Once the construction of its new airport is fully completed, it will be able to handle over 100 million passengers annually. This project is so far the biggest infrastructure project in Vietnam's history, with an investment capital of around $16 billion, estimated budget of 2014. And we will see if that number holds. It will replace the existing Tan Son Nhat International Airport as the city's main airport. The airport is expected to contribute around 3 to 5% to GDP once completed. Well, this is all from me this month. Thank you very much for listening, and you're going to hear from me again next month with another update. Bye bye.